Man.
All right, folks, I want to bring in now Bianco Research President Jim Bianco. And Jim, you know, there's pressure on global food. The situation continues. I was checking out your tweets, and if I read it right, it seems to me you're saying to central banks, now is the time, the better part of valor is to take aggressive action to save the world in a sense. You know, forget about financial markets for a moment, because this is having a huge impact on humanity.
That's right. We have to remember that for the 2 billion poor people of the world, that when food prices go up, it really hurts them. They literally starve. And so when we see food prices go up like this, whether it's Sri Lanka or Peru or wherever else we might be seeing it, from these riots, these protests about food is a big problem. It is important to get those prices down. Now, in the United States, we don't have that problem, as Jeff Locke just pointed out. You always have the option to get it. Right. You just don't like the price, but you can get it. The answer, hopefully, is not going to be, let's subsidize people in the U.S. to keep affording higher prices, because that keeps prices up. So if central banks want to raise prices on interest rates and help to depress the financial markets, to push down demand a little bit on the economy, that's what I think they're going to do, and they've got the lead in now with what we're seeing in the rest of the world with inflation. What
camp are you in? Some people have said that the Fed won't be doing an effective job if they don't actually trigger a recession. That means that they won't have gone far enough unless we do indeed lapse into a recession. Are you in that camp, or can they engineer a so-called soft landing?
It's unlikely that they'll engineer a soft landing, but I think what we ought to remember is what the Fed is doing. If you want to argue, are they making a mistake by raising rates too much and threatening a recession? That was set last year. Last year, when inflation was moving up, they kept saying it's transitory, it's going to go away. If they had dealt with the problem a year ago, we wouldn't be in this position now. So I think that they're going to be aggressive, and they are going to risk a recession. I hope it is a soft landing, but history suggests that that's the long shot right now.
Is that what the bond market is telling us, that the pace of these yields spiking to this degree?
Yeah, I think that the bond market is saying that, pay attention, the Fed is going to get aggressive. There's a lot of people in the financial markets that are saying, no, once the stock market gets wobbly, the Fed will back off. Well, that was always the case until we got inflation a year ago. But now the debate is, will they back off when they start raising rates if the markets get wobbly? I think the answer is no. They won't back off. And I think the bond market, by having rates continually go up, are saying they're not going to stop just because the stock market has a tough go of it.
It's not just the stock market. So you posted the best quarterly returns. Nothing was the best, right? So, you know, I mean, the S&P down 4%, almost 5%, everything down. The 60-40 portfolio, the world stocks, emerging stocks. Where does someone invest in this sort of environment?
Well, what that is showing is that you're right. For the first time in 28 years, if your option is, where do I invest? And you're asking stocks, bonds, world, domestic, international, they were all down for the first time in 28 years in the first quarter.
Wow.
And that's because we have the highest inflation in 40 years. Inflation does that to investments. It pushes them all down. Where do you invest? Let me use a fancy word, idiosyncratic. If you want to pick individual stocks or individual ideas or a cryptocurrency, those can be successful for you. But if you're saying a major asset category, whether it's going to be international bonds or domestic stocks or anywhere in between, they're all going to struggle until this inflation rate comes down, because the threat is central banks will continually raise rates and lean on the economy.
Idiosyncratic.
Yes.
I got it. Great seeing you in studio. Great work, Jim. You're one of the best. Appreciate it.
Thank you.
All right, folks, everywhere you